What's up, guys? Welcome back to the Silicon Trading channel. In today's video, I decided to do a little breakdown on Bitcoin. This breakdown is mostly for my own personal analysis, own personal records, to share with a couple friends, give some insight. And I figured I'd record it and put it on YouTube. This might help some retail traders that are currently, looking to invest into Bitcoin and maybe give some insight. This is by no means financial advice or telling you what to do. I think you're smart enough to make your own decisions, make your own, assumptions. This is just a random guy on YouTube giving an opinion based on what he's seeing on the charts, based on the current news, which obviously could change at any point in time. But anyways, let's get right into it. So here on the monthly chart, we see this behemoth and this huge move that it's been making to the upside since November of 2020, and it's been all over the news of how Bitcoin has been pumping up like crazy. So the obvious question at this time is, should I invest in Bitcoin? Is this a good time to buy? Everybody is talking about Bitcoin going to 100,000 next. What's going on with Bitcoin? What should I do? So let's do this breakdown and see what we can see. So first and foremost, what we can immediately see is that this thing has been on an upward trajectory for a couple months now and has offered no significant pullback on the monthly time frame to test any of these highs that it's broken out of. So we have a high at around 14,000 and another high from 2017 at 20,000, which it has not came back to give a retest. So solely based on technical analysis and reading the chart and seeing what it's showing us, based on technical analysis and normal everyday concepts that we use to trade the markets day in and day out, this is a significant push with no retrace. So the expectation is that this at some point in time will return back to these levels to test once again and maybe potentially push further to the upside. So we have to keep this in mind. Now, before we move down into the lower time frames like the weekly and the daily, some things to note here. We see the upward volume, and every single monthly candle has a huge wick, which the volume fills the very next month. So wick, fill, wick, fill. Last month, it had a little wick. So this to me is showing that there is strong buys here, but it is slowing down. And if this could potentially fill this wick and, potentially just move further up, or fill this wick and start its trajectory back down. This is a brand new month. We're only a day or two into the new month. So there's still a lot of time left for this monthly candle to show us what it wants to do and which way it wants to head. But as mentioned previously, we do believe there is a severe downside trajectory coming very, very soon. And one additional confluence we have here at this potential is running a Fibonacci from this last bottom, which was in March of 2020, to the current all-time high. So with this Fibonacci plotted from bottom to top, we can start see potentially some things aligning here. We have a 61.8 just above the 20,000. But more interestingly enough, we have a 50 EMA creeping to the highs right here at 14,000, a 78.6 in between the $20,000 high. So to me, this gives me more confluences at this area, you could say, to kind of mark out a zone here, a zone of interest. So I would say anywhere from 20,000 to 13,000 is very, very potential for this to come back, retrace, and then head back up potentially. But again, this is the monthly. This could take a while, but also keep in mind that Bitcoin is very, very volatile and it makes tremendous moves every single month. So you could see this monthly candle. If we measure the previous month's candle, it's even bigger. So people think that, this can't happen, but realistically within, let me clone this. let's just say we had 2 big months of decline, we could very well be back in this zone, if not even lower, just based on the monthly movements that it's had in the past. So it seems crazy that it would go from 60,000 basically back down to 20,000, but I can't write it off as it cannot happen. So as investors, we have to always outweigh the risk to reward. What's the risk? What's the reward? And what makes more sense based on what we're seeing at this current point in time. So for me personally, as an investor that wants to hold Bitcoin, not margin trade Bitcoin, I'm asking myself, is this a good time to enter? Yes or no? And using basic risk to reward principles. So let me pull out the here. Let's use this tool, risk to reward tool. So let's say we went long here. We like this. We've seen some news. Everybody's saying 100,000. So let's see what kind of percentage this would net us, or what the risk to reward is in this occasion. So for me personally, if I was Tanner, right at this exact moment, I think being realistic and taking what I'm seeing into account, I would assume that, let's say, a stop loss would be somewhere around $10,000, maybe even potentially $8,000. And if you really want to get crazy, you would really expect it to not go past the previous low. So anywhere $2,000. But let's be a little bit positive, and let's say 10,000. $10,000 stop loss. Everybody's saying this is going to go up to 100, which does align with the Fibonacci if it were to pull back. But let's say it just goes up. And we could see here that the risk to reward is 0.83. So it's not even a 1-to-1 if you were to buy at this point, because the downside risk is so severe. So without making things too complicated, this is simple. We all know the old saying, buy low, sell high. Buy low, sell high. This is pretty simple. So to me, it does not make sense to essentially buy high, have a huge downward risk just for the potential that Bitcoin can push up to 100, and having some FOMO, some fear of missing out, and not being able to capitalize from 60 to 100. Now, with that said, we've covered, I think, for the most part, the monthly time frame. So let's head down to the weekly time frame and see what other data or clues we could see from the weekly time frame. So on the weekly time frame, we can see the continuation of this just pushing back up. And to be honest with you guys, this looks very, very bullish, especially the previous weeks that have left these long wicks to the downside. This, to most investors means seller's exhaustion. So anybody that was selling here or shorting BTC here, I think they've been, probably taken out of the market. And this week alone is starting to create a bullish candle. So with the creation of the bullish candle and us knowing that we are in a brand new monthly candle, this could as well just continue moving up. But we have to keep in mind that the weekly candle still has 2 days and 8 hours to close. So for all we know, Bitcoin loves to make moves over the weekend for some reason. And over the weekend, this thing could just close and leave a big wick up top. And this could even possibly close bearish. Like we don't know. But for now, the weekly time frame is telling us we're moving up. So now that we've covered the monthly time frame and the weekly time frame without much need to plot anything, we know we're on the upside. Monthly has given us our downward targets. Let's go down to the daily and see what else we could see. So on the daily chart, quite frankly, you could see some very nice movement here. It's very well, I think, respecting kind of, market structure the way it should. It's making highs, it's making higher lows, higher highs, higher lows, higher highs, higher lows. And this is the point of interest at this point, whether this is going to make a higher high or we're, this at this current point in time is a higher low to this higher high. So is this going to make a lower low? That's the $1,000,000 question. And that's why I decided to make this video, because I think we're at a very important point of influx on Bitcoin right now. So since we're analyzing this with fresh eyes, let's point out what we can see. We can see we have a 50 EMA that's been respected. It's been tested a couple times. We move up, we come back down, we move up, we come back down. I'm going to call that a test of the 50 EMA, and now we're pushing back up. The 200 EMA has not been tested in a long time, so that's something to keep in mind. Now, by plotting a simple Fibonacci, let's see what we can see. We go from bottom to top. We got a 38.2. So with the 38.2, I know a lot of people don't have this level on their Fibonacci, but I do have a 13.80 upward projection, which based on backtesting in my own strategy, I've found that when the market comes back to the 38.2, it'll shoot pretty fast to this level, reject, and continue the Fibonacci sequence. I know a lot of people only have the 27 and the 61, but personally, I do have this level because, like I've said, I've backtested it and I found that it is significant when market structure is bouncing off the 38.2. So I'm going to call this level met, even though it fell a bit shy and the bears came in relatively fast. I do think there was a lot of bear pressure here because it did break the $60,000 mark. So I'm sure there was a lot of shorts that were here, and it just kept it a bit shy of hitting the target before pulling back. So with that said, continuing the Fibonacci sequence, we pull from the low to the high, and here we go. We have a 61.8 retrace, but on the 50 EMA, we could add a couple more confluences here. We have some nice demand zones, a little liquidation zone. This would have been a great time to long Bitcoin. And as you can see, I think a lot of investors did long Bitcoin. Let me zoom in, because we had this big bullish candle push out of the zone, push off of the 61.8 and the 50 EMA with expectations to, move to the upside. So as an investor, I think this is where it starts getting interesting, because you have highs. Let's get rid of the Fibonacci for now. You have a higher high, but you see the difference of volume from here to here and from here to here. To me, that says that volume is slowing down to the upside, because I would have expected somewhat the same push to the upside, I guess you could say. But it looks like that wasn't met. So using a bit of critical thinking and plotting a couple things, I start investigating, okay, what's going on? What is price action trying to tell me? So I plot this trend line from A to B. That lines up pretty well. Like I've said in videos in the past, sometimes I do wick to wick, sometimes I do wick to body. And if you do wick to body, you cheat it a little bit so you get the most touches possible. Then we can start to see, let's get our ellipse tool here. We have the low, we have a touches all through here, touches. And interestingly enough, we come back down, we come back up, and we break this low. So a lot of times, people will call this a break of structure. Let's make this nice and red. I don't necessarily think this is a break of structure since the previous low is still here. But it is interesting to see that this pulled back up. It wasn't enough to push it through. Again, we said this movement here is very small, and then we pulled back down. So very interesting to me, especially after this pushed up and we had an additional touch on the trend line, but now on the backside. So I do believe that a lot of retail traders might have possibly been seeing this movement, seeing the upward and downward trajectories, and when they came to test the back of the trend line, I think there was a lot of shorts here. But what I found is that the market knows that there's going to be shorts here, and there is a bit of, let's say, manipulation. It comes back down. The retail trader isn't paying attention to the overall structure, not just the quick, this structure here. You have to pay attention to the overall structure. So this is a higher low, because this is the previous higher low, and it pushes back up, and it looks like we're just shy of testing the trend line once more on the backside and potentially making a move to the downside. So that is one confluence that we have at this point in time. Let's see what else we can see. Let me just clean this up really quick. So we know we have a trend line coming through here. For the most part, I like to clean my chart up because I do believe it lets me see a little bit more than if I have all these things drawn on at the same time, then it just kind of clutters my mind and doesn't let me see the overall picture of what's going on. So I've just completed these drawings so I can still envision them in my mind, but I don't necessarily need them to be on the chart. So one of my personal strategies that I always do when taking any position in the markets is looking at the opposing position. So we've all known and we've all heard that it's retail versus banks. So I always try to think, where could this price be manipulated, or what am I not seeing? Potentially, what are the banks seeing? What is anybody else seeing that could hurt me essentially in my position and what I'm trying to achieve? So based on those principles, if I'm going long, I place the Fibonacci on the opposite direction just for perspective per se. As you can see, this came down, this did a double bottom, pushed up. I'm going to call this a 61.8. There was probably a lot of shorts in this area and it pushed the price back down. Ultimately, the bulls won. So this invalidated the Fibonacci and it pushed all the way through. So that is one example of how I plot the Fibonacci on the contrarian to the long, just to keep an eye of potential profit taking levels, because you never know. This level here might have an enormous amount of sell orders, or you just don't know who's coming into the market at these levels that could just potentially just wipe you all the way back out down to these levels, let's say, and test the 200 EMA. So I believe as a retail trader and retail investor, you have to, keep an open mind as to, I'm going long, who's going short, where can I take some profits? I'm not going to take a buy and say, okay, this is going to 100,000. Let's say I'm lucky enough to take a buy right here. Double bottom, take a buy. Okay, targets, 100,000. 100,000 because there's no other targets. There's nothing else that could happen. No matter what, let's hodl this. Let's hodl. I think this hodl mentality is the worst thing for retail investors, because they don't know when to take their profits, when to scale in, scale out, and how to diversify their risk essentially. But anyways, we'll potentially touch on that a little bit later in this video. Let's keep moving with the market breakdown here on the daily. So we know we're pushing up. Let's hit our next Fibonacci, which we already plotted once, here to here. And with my risk principles, we'll plot the opposing Fibonacci. So from here to here, as you guys can tell, once more, it came, it pushed up to the 61.8, and then it pushed back down. So a lot of sell orders here. But again, the bulls won and invalidated this Fibonacci and essentially pushed up. So a lot of people want to say, Fibonacci doesn't work. Fibonacci is a self-fulfilling prophecy. And I don't disagree with you. I don't think it's a magic key or anything like that, but it works. You can't tell me it's a coincidence that it just comes and hits this level. I don't think so. So anyways, let's keep moving forward. We came from A to B to C. We know we're on this current Fibonacci extension. So with that, let's plot the opposing Fibonacci from top to bottom. And interestingly enough, what I've had plotted for a couple days and I've shared with a couple of my colleagues is we are testing very hard. This 78.6. Let's draw a little zone here based on the previous wicks. So we could even potentially make this previous wick over here the top of our zone, even though we're kind of bound to this level, but let's put it a little bit higher. So as we can see, at this point in time, I don't know who is entering the market at these levels, but there could be a potential short increase or short interest increase at these levels, especially since price has been showing us that it's been slowing down on the trajectory up. So if that was the case, then I would expect price to, for one, test this 50 EMA, potentially blow past the 50 EMA down to these levels, potentially down to this level, as we do have, let me plot this real quick. We do have a lot of liquidity here. This is the low, hasn't been tested. If shorts are strong enough, I don't suspect that, this couldn't break all the way through and push further to the downside, but these are extended targets. Firstly here, then here. But let's see, let me throw this back up just so we can take a look how the levels are aligning. So we know we got a 61 and we have a 78.6 right where the negative 27 is. So potentially what could happen is we could have this fall to here. Then this Fibonacci sequence will be met. Let's get rid of this. Let's get rid of this. And we know we're coming off the back of this to here. So we could have a kind of like a B, C, and then A, B, C, potentially. Let's say we push back up to the 61 or the 78, and then all of a sudden our targets start lining up. Now the 27 is down to the low, even breaking the low down to here. I'm sure by this point it'll be a couple days or a couple weeks, nobody really knows. This 200 EMA will be creeping up, creeping up, creeping up, and we'll probably test the 200 EMA. And then at that point, it'll be a crucial point in the market, and we'll see, based on what fundamental news comes out at that time, seeing what the structure looks like at this point in time, whether this is just gonna bleed and fall through, or whether we're gonna continue the sequence up, down, up, down. So you can see the thought process here down to the short. So as an investor, I have to keep an open mind. I can't get caught up in the hype of, whoa, this is going to 100,000. We're pushing up so fast. FOMO, I'm going to miss out. I have to take into consideration that this could pull back. It's not like it hasn't done it before. I think we've all seen in the news that, let's take a look at this weekly candle. It went all the way from 57 to 43. So, 10,000 plus. I don't see why this can't go from 60 down to 50. Again, another $10,000 move to the downside. And I do believe, if this sequence begins, then potentially, retail traders or maybe a lot of big bank investors also will start to get spooked, and they'll start selling, and that just increases the selling pressure, and back down. We go all the way down to our target of 14,000. So I hope you guys can see how the stars are kind of aligning on Bitcoin and how we're at a crucial influx here. Bitcoin does love to make moves over the weekend. So I think over the weekend, we'll know whether we're going to keep on pushing up or we're going to start pushing back down. I don't discount the short per se. And I wouldn't be surprised if there's some sort of large news that comes out on Monday morning to kind of justify the push up or the push down. Because we all know, just like the stock market, just like the foreign currency market, or especially the cryptocurrency market, this price is manipulated. And just like the stock market, a lot of times the news gets priced in by these institutional traders before before the news comes out to the public. One additional confluence that I want to show you guys that I actually forgot to plot while I had this on here. We have our Fibonacci. We have our liquidity zone. Now, one thing I like to do is invert the scale. Let's go down to the 4-hour. And to me, this looks like a head and shoulders. So we got the head. We got the shoulder. We got the head. Now we're at the lows. I do think we could possibly make a right shoulder. So that would aid our analysis that this price is going to pull back before potentially, pushing higher. But again, Bitcoin changes so often. It changes by the minute. As you can tell, there's a lot of volatility here. So, this could potentially be fulfilled. This could not. We have to keep an open mind, and we just have to continually watch the markets and see what Bitcoin wants to do. But just to continue, let me plot this up really quick again. We'll do the head. We'll do the shoulder. Let's say the left shoulder is right around here. Now let's grab our Fibonacci from bottom to top. And all of a sudden, let's get rid of this one so we can see clearly. We have a 61.8 or a 78.6. So this does align with us going, coming back, going. And of course, if it rejects these levels, we would once again post another Fibonacci up here just to see. Now let me get rid of this one so we could take a look whether this thing's going to go from here, let's say to here, then from here, potentially to here, then from here down to these levels. And again, we start aligning, the stars start aligning again for us to hit these lows, test these lows. But this is a crucial time, and we have to wait and see whether this is going to be fulfilled or not. So again, one of the last things I want to touch on really briefly is looking at some of the fundamental news and just giving some perspective to retail investors, retail traders, what the mentality is when getting into Bitcoin or wanting to get into Bitcoin. So for this, let's pull up some news. So I pulled up a couple of these. Let me maximize this. And I just want to go into the mindset of investing into Bitcoin. So I think where retail investors can get hurt is where they have FOMO and they think they're going to make a lot of money quick. And they invest their life savings, or they take out a line of credit, or they, God forbid, max out their credit cards or do something ridiculous in order to make some money with Bitcoin. But one thing I want you guys to keep in mind is these big investors. Everybody's talking about the big investor plummeting. They're putting 50 million into Bitcoin. Let's take a look. Tesla put 1.5 billion into Bitcoin. So there's a lot of money going into Bitcoin. But one thing I want you guys to see is the fact that Square only allocated 1% of its holdings to Bitcoin. We all remember this. This was last year in October. Tesla, we all know Elon Musk. He's a little bit on the wild side. He's a little bit crazy. So he decided to put almost 8% into Bitcoin. But again, he's sitting on so much cash because of Tesla stock being so overinflated that I think to him, the risk to reward was so great, especially with the influence that he has on the markets. This guy tweets and things just skyrocketed. So I think he went heavy on his investment because he knew he was going to tweet. And, when you're $1.5 billion deep into Bitcoin, the minimal amount of movement in the markets is a lot of money. So there's no saying that he got in, at this price, and as soon as it pumped up to this price, he's all the way out, or he's scaling out there's just no telling. Now let's keep going. JP Morgan, they suggest 1% crypto allocation. And lastly, Mr. Kevin O'Leary, Mr. Wonderful from Shark Tank, he's putting 3% of his own portfolio into crypto, into Bitcoin. But again, he's heavy into the ETFs. So I don't think he's going to be holding Bitcoin per se. I think he might hold an ETF that's a Bitcoin that just follows Bitcoin. But I don't think he'll be holding, Bitcoin itself. Because let's not forget, Kevin O'Leary called Bitcoin garbage just a few years ago. But as a savvy investor, he's seeing what's going on in the market, and you can't be stubborn in the markets. If you see something, then you have to act on what you see. At the end of the day, we only act on what we see on the charts and what comes out in the news. I'm not going to sit here and say Bitcoin is for sure coming down to this, and then for sure going up to here, and then for sure doing this. Like, no, there's no telling. There's no telling. This thing might just go. This thing might just go to $1 million and never come back. You don't know. Alright guys, so that was my insight into Bitcoin. I know this video is getting kind of long, so I'm going to cut it off here. I hope that gave you guys some great insight as to what I'm personally looking at, what I'm sharing with my friends and family. But again, this is just a random guy on YouTube putting perspective out there. This is not financial advice. I'll leave it up to you to make up your own mind whether you want to invest in Bitcoin at these levels or not, and what the potential risk is. But anyways, if you have any questions, drop them down in the comments. Hit me up on Instagram at Silicon Trader. As always, I appreciate you guys watching until the very end. Hope to see you guys on the next video. I'll catch you guys on the next one.